Hello value investors, thank you for joining me. Today we're going to talk about PayPal and why I believe that PayPal is undervalued. We're going to talk about its revenue growth rates and its guidance. We're going to talk about the sell-off that happened after hours. Then we're going to talk about Venmo, which I think is an interesting opportunity. Finally, we're going to bring that all together and talk about its valuation. So if you haven't done so already, don't forget to check out my marketplace. It's called Deep Value Returns, where I tell you which stocks I own and why, with a balanced argument for the stocks I own. You're welcome to do a totally free trial, so just check out Deep Value Returns on Seeking Alpha. So, PayPal is growing, let's say, in the ballpark of 22 to 24% year over year. So if the guidance out to Q4 is in that ballpark. So you have a company that is ticking along at 20% growth rates. Yet, so without any surprises in the quarter, really, the stock sold off by 5% after hours. So I don't think that this is justified. I think that right now, in 2020, a lot of the bull market has taken place because tech stocks have really carried the market, whereas the rest of the market has been falling out. And there's this expectation that tech stocks are immune to the underlying Main Street, and you've seen that it's possible that a lot of sentiment has been people are just invested too bullish on tech. And right now, if there's not positive surprises in the quarter, many stocks are selling out after hours, and even if they're beating on the top line. So the market is kind of a bit unsettled right now. But if you're a long-term investor and you're thinking out, okay, how is the earning power of this company going to look out in the next 3, 4, 5 years? I don't think there's enough here in this quarter to say, okay, I would just like to sell out. Also, I will just point out that I like this opportunity in Venmo because I'm investing in Square, so that's the disclosure there. And Square obviously has the Cash App, but with Venmo, we can see here, so payments in the quarter were up 61, total payment volume was up 61% year over year in the quarter. So it's again that notion that digital wallets are taking market share as payment solutions. So I think that this is very compelling, and I think that although this is small for PayPal, and if we look out to 2021, this is going to make up approximately 900 million in revenues. So it's not large enough for PayPal to start disclosing that out as a segment, but it's definitely growing speedily enough that maybe by 2023 it would be disclosed out as a separate segment, and at that point investors will be willing to put a better price on that. So I believe that this is one of the opportunities within PayPal that is not being sufficiently priced in. So I put this question out there, does free cash flow still matter? So is PayPal viewed by the market as a fast-growing opportunity, or is PayPal viewed as a mature fintech company? So this is the irony, because PayPal has never really been a fast grower. PayPal has been steadily growing in the teens growth rate. Right now in 2020, it's actually the fastest it is growing. So it's clearly growing very fast, yet it's still producing a lot of free cash flow. For 2020, its free cash flow estimates is 5 billion. That puts the stock trading at approximately 41 times after our sell-off, 41 times this year's free cash flow. This is not non-GAAP EPS, this is not some kind of massage number, this is clean free cash flow. So I think that's quite attractive, and I think that is something worth considering. Just finally, I want to just talk about, so in this quarter, it was the first quarter the free cash flow was quite weak. So in the previous 4 quarters, free cash flow had been expanding year over year, and this quarter, Q3, was negative 48% year over year. So that can be something. I wouldn't put a lot of weight on this when the company is consistently putting out 20% growth rates, but I just wanted to put that out there. Again, this doesn't really affect much for the year because the year is still expecting to be slightly more than 5 billion of free cash flow. Finally, so with PayPal, the analysts are expecting this to taper down to below 20% growth rates. I don't think that that's justified. I think that there is more here that meets the eye, and I think that the company can still keep going at slightly above that, and I don't think that investors are paying a large multiple for PayPal. If you look out to its 2021 revenues, investors are paying approximately 9 times forward sales. I don't think this is a large multiple for a company that's clearly generating as much free cash flow as this is and is growing steadily as much as this is. So I hope you found this video useful. Don't forget to check out my marketplace, Deep Value Returns. I'll see you next time. Bye.